Happy Monday, everybody. I hope you had a good weekend. As we close in on Thanksgiving, I want to say once more, I am very grateful to you, and I wish you all a happy Thanksgiving. As we do here every week, let's recap last week's market action and news, and let's preview what we can expect for this holiday shortened week. Today is November 25th, 2024, and this is, of course, your Monday market update. Last week, stocks dealt with some geopolitical tensions, eco data, and some big earnings reports. Despite mixed signals, the market maintained a generally positive momentum. On Monday, the market stabilized after last week's decline, supported by a favorable bond market and positive sentiment in housing. Fed head Goolsbee spoke, but nothing new from him. By the end of the day, the Dow was flat, S&P was up about a third of 1%, the Nasdaq gained a half of 1%. On Tuesday, markets woke up to Russia and the news that they have lowered the threshold for the use of nuclear weapons. Nothing like that to wake you up in the morning. In most times, we discount this, but today, with what's going on in the world, who knows? So just to keep that geopolitics in play, Ukraine reportedly launched a U.S. ballistic missile into Russia, and that was not received well, as you can imagine. The arms race over there, rightly so, makes markets nervous. Cooler heads did prevail for now, and comments that seemed to cool things down a bit did come about. So markets did open near post-election lows, but it found its footing quickly. Walmart earnings were enough to calm consumer questions. They're still buying. Same-store sales were up, and the stock hit all-time highs. By the end of the day, the markets forgot about Russia again and finished mostly in the green. The Dow was down less than a quarter of 1%. S&P and the Nasdaq both up just under half of 1%. Nothing too exciting, but with Nvidia earnings still to come and Russia, Ukraine headlines, when the selling turned, that wasn't a bad sign. Wednesday brought a quiet open, but stocks did turn lower as the market digested the news of the day. Yes, eco data this time, global now. Inflation readings in the UK. Germany also came in a bit hotter than expected. I will tell you, it's very interesting to see the media report this as warmer than expected, not hotter than it like it used to be. So again, as I've told you, rainbow and unicorns, that's what people are seeing right now. Now, I'm just trying to keep it real. Other news that brought selling was the news from Ukraine again, now firing a British-made Storm Shadow missile into Russia. Escalation is not what the world wants right now. Fed heads did get into the action. Also, Cook and Bowman spoke about a possible pause in rate cuts as progress on inflation seemed to have stalled. Markets processed all of that and a poor 20-year Treasury auction, but finished flat in front of the expected Nvidia earnings after the close. The Dow was up about a third of 1%, S&P flat, and the Nasdaq was down just slightly. There was a lot to move markets on Thursday. Most of that started Wednesday after the close with Nvidia's earnings. As I told you, it was not a bombshell to the markets like everyone thought it made it out to be. After the close on Wednesday, the stock sold off, only to open higher in the morning. Muted as a whole, so on to the rest of the news. Russia launched a non-nuclear ICBM into Ukraine. Here we go again. Eco data from the U.S. was pretty close to Goldilocks. It even supported a December rate cut idea. And if that wasn't enough, Matt Gaetz withdrew his name as Attorney General. The market liked that. Not so much a read on him, though there's plenty of that, but more so on the fact that he withdrawing leaves one less fight in Washington. We'll see what replaces that. Markets don't like the political uncertainty, and the nominations are bringing that in now. If the uncertainty goes away, the pro-growth Trump trade could return. By the end of the day, the Dow was up 1%, S&P up a half of 1%, and the Nasdaq was just slightly up. Markets opened little changed on Friday. Futures had been off early due to some Euro eco data, but U.S. eco data in the form of flash PMI, on top of the positive momentum from the pro-growth Trump trade, the turn the day before, restarting the Trump trade, had things headed higher into the end of the week. University of Michigan sentiment survey indicated lower sentiment post-election, but it was better than the October reading. This carried markets into the weekend. By the end of the day, the Dow was up 1%, S&P up about a third of 1%, and the Nasdaq was up just slightly under a quarter of 1%. For the week, the Dow was up 2%, the S&P and the Nasdaq each up about 1.75%. Note that stocks that seem to never go down held the Nasdaq back for the week. Nvidia was down 3.25%. Alphabet, with a call to divest Chrome, down about 1.75%. We're seeing the market broaden out, and that will be very important to watch. We spend a lot of time quoting the three main indices, but you have heard me talk about the overweight in the S&P to the Mag 7. As of about 2 weeks ago, the Mag 7, that's of course Apple, Microsoft, Alphabet, Amazon, Nvidia, Meta, and Tesla. According to Reuters, they make up 1/3 of the market cap of the index and have year to date accounted for 50% of the S&P 500 return. That's the point. That if we do see broadening of the markets, the S&P 500 index may not be the short-term winner, just so keep an eye on it. We've spoken about the equal weight S&P 500 index before. We'll see how that plays out. Let's talk about this coming short week, short on time but heavy on data. We often find that data plays to empty chairs this time of year, so we'll see how that goes. Nothing major in the eco side today. I'll talk about political side in just a moment. But tomorrow we'll start with housing data and also the FOMC meeting minutes. We usually get those on Wednesday, midday, but by then I think a lot of people are going to be gone for the week. So we'll get them tomorrow. I'm not expecting any surprises on that. On Wednesday, we will get the other eco data. And again, early, we're going to get Q3 GDP revisions, and we'll get the jobless numbers. Overall, jobless has been really pretty quiet, but the continuing claims are worrisome. Seems to be getting clear. Companies are not firing as much, but they're also not hiring. So before everyone leaves for football in Turkey, we will get the inflation number that we seem to hear is the Fed's favorite, the PCE, and that will be out as the last major eco news of the week. Yes, the Fed keeps watch on that, but as I've maintained, the inflation, I do not believe, is a fear at this time. Thursday and Friday, you'll get nothing but Black Friday sales. The week will be free of Fed heads, but not of earnings. They will get lost. I think they'll probably get lost in the shuffle, at least some of them. But CrowdStrike, Dell, Best Buy, we'll hear about them. That's all about it for this week. And yes, as I said, I go back to it from the politics side. Janet Yellen will be set to hand off the reins at Treasury in January to the new pick, Scott Bessent. Bessent is a hedge fund manager. His resume includes working for George Soros, but also an economic advisor for President-elect Trump. He is all on board with the tariffs, lower taxes, and deregulation, pro-growth. That is one of the main reasons you're seeing lower Treasury yields and maybe one of the reasons this market is moving up. We're going to keep watch on geopolitical action, but we hope they cool down also. Okay, that's the week ago and the week ahead. As I began today, I want to wish you all a great Thanksgiving. I'm very grateful for all of you. There will be a Friday planning video, and of course, we'll be back in December. Next Monday is December 2nd. I'll be back with a wrap-up of this week and some previews for the last month of the year. For now, if you take some time off this week, enjoy, and we'll be in touch soon. As always, we recommend staying diversified and vigilant as year-end trends and potential risks materialize. Have a great week.